Today on Crypto Win Rate, we're doing a full futures trading tutorial on BYDFi. I'll walk you through everything step by step so you can understand how futures trading works and start using the platform with confidence. If you want to receive a welcome bonus, I recommend you create a BYDFi account with the link in the description. New users registering with our link will be eligible to receive these exclusive welcome bonuses. To start our tutorial, the first thing we want to do is make sure we deposited funds into the Rate account. So we're just going to hover on the top above this wallet icon and click on Overview. Here we can see we have 200 USDT in our spot account. We want to switch that to our USDM account. So we're going to click on Transfer in the top right. Make sure we have from spot to USDM and the token, which is USDT. And we're going to transfer the full amount. Click Transfer. And we have successfully transferred our USDT to our USDM account. The next thing we want to do is understand the trading fees on BYDFi. So we're going to go to the top left and click on the BYDFi icon to get back to the home page. And then we are going to scroll all the way down to the bottom and under services, click on VIP service. Here we can just scroll down a little bit more and we can see the futures trading fees. Exchanges usually charge two types of trading fees, maker fees and taker fees. Maker fees apply when you place a limit order, while taker fees apply when you execute a market order. On BYDFi, the base taker fee is 0.06% and the base maker fee is 0.02%. To reduce fees, you do have to level up. If we just go down a bit, we can see the different VIP levels. In your own time, you could look at the different levels and the different requirements to reduce your trading fees. Now that we understand the trading fees, we can head up to the top under futures and we can see that there are three different options. We have USDT-M futures, USDC-M futures, and Coin-M futures. USDT-M and USDC-M simply mean the trade is margined with a stablecoin, either USDT or USDC. So your balance, profit, and loss are all shown in stablecoin value. Coin-M is a little different. With Coin-M contracts, you're using the actual crypto itself as margin, like Bitcoin or Ethereum, and your profits and losses are also calculated in that coin. For beginners, I recommend sticking with USDT-M or USDC-M because it's much easier to follow. You can clearly see how much money you're putting into the trade, how much you're risking, and how much profit or loss you have in dollar terms. Coin-M contracts can be useful for more advanced traders, especially if they want to trade while holding the actual coin. But when you're just starting out, stablecoin margin contracts are usually the simplest option. So we're going to click USDT-M futures. And for this tutorial, we are going to be trading the BTC USDT pair. BYDFi has lots of different tokens that you can choose from. You can even see the different categories like TradFi, stocks, RWA, AI. Let's say you want to trade an AI token, you could just click on AI and you can see all the AI tokens that BYDFi has to offer. Looking beside our token, we can see this top bar. In futures trading, you'll usually see two different prices, the mark price and the index price. The index price is the real market price based on an average from multiple exchanges, while the mark price is what the exchanges use to calculate your profit, loss, and liquidation. So in simple terms, index price shows the true market value and mark price is what your position is based on. We can also see things like the 24-hour high, 24-hour low of Bitcoin, the 24-hour volume in BTC, and the 24-hour volume in USDT. On the right, we can see something called funding rate / 8-hour countdown. The funding rate is a small fee paid between traders to keep the futures price close to the spot price. If the rate is positive, long positions pay shorts, and if it's negative, shorts pay longs. So right now we can see it is negative, so shorts would be paying longs. The 8-hour countdown right here shows you when the next funding payment happens. Most exchanges use 8-hour blocks. If you're holding a position when the timer hits 0, you'll either pay or receive that funding fee depending on if the rate is negative or positive. Next, let's quickly go over the trading view chart. On the top left of the chart, you can adjust the time frame. The time frame changes how much data each candle shows. Lower time frames like 1 minute show quick price movements, while higher ones like 1 hour or the daily give you a broader view of the trend. On the bottom left of the chart, you can see this little arrow. You can click that, and here's where you'll find your drawing tools. You can use trend lines to follow direction, horizontal lines to mark key support and resistance, and tools like the Fibonacci retracement to spot potential entry or exit areas. You can also add indicators on the top here. These are built-in tools that help with analysis. Common ones include moving averages for trends and RSI to track momentum. Just to the right of indicators, we have the ability to edit the chart in terms of how it looks. So right now we are in candles. We can make the chart bars. We can make the chart a baseline. It really just depends on how you like to view your chart. For this tutorial, we are going to keep it on candles and put the chart on the hourly time frame. At the bottom is where you'll see trading volume. This shows how much buying and selling activity is happening. Higher volume means stronger moves, while lower volume can mean weaker momentum. Now to the right of the chart, we have the order book. It shows all the current buy and sell orders on the exchange. Green represents buy orders, while red represents sell orders. The order book can help traders see supply and demand at different price levels, while also giving you a sense of the asset's liquidity, meaning how much buying and selling interest there is at each price. Beside the order book, we have recent trades. It shows real-time transactions happening in the market. Each trade gives you insight into current price action and market momentum. On the top right of our screen, we can head to settings. For our preferences, the main setting we want to look at is position mode. There are two different position modes. We have one-way mode and hedge mode. In one-way mode, you can only have one position at a time on a pair, either a long or a short. If you open the opposite trade, it will reduce or close your current position. In hedge mode, you can hold both a long and a short on the same pair at the same time. For beginners, I recommend using one-way mode. It's much simpler to manage and helps avoid confusion when placing trades. So we're just going to stick with one-way mode. Now to the right of preferences is style. In color mode, we can change the color of our charts. So right now we have red and green, which is traditional. We can change that to fresh, which is red and blue. And we also have blue and I think it's orange. We're going to keep it at red and green though. I just wanted to show you that. We also have two different layout options. We have right, which is pretty traditional for most exchanges, and we have left. So again, it kind of just depends on what you prefer, but we're going to keep it on right. We also have something called watch mode. Watch mode is a helpful feature that lets you view multiple charts at the same time. Instead of jumping between tabs, you can track different trading pairs side by side and compare how they're moving in real time. For example, with two charts, you can watch Bitcoin and Ethereum together, compare their charts and look at their price movements, or you can look at the same asset on different time frames, like a lower time frame for entries and a higher time frame for overall trend. In general, it makes it easier to stay organized, spot opportunities quicker, and get a clearer view of the market. To head back to our normal view, we just go back to the top and click on settings again, style, trading mode, and back to default layout. Next, we are going to talk about margin mode and leverage. With isolated margin, each trade has its own set amount of funds. So if the trade goes against you, you only lose what you put into that specific position, not your whole account. With cross margin, your entire USDTM account balance is shared across your trades. This means your position can use more funds to avoid liquidation, but it also puts your full account at risk if the trade goes badly. Leverage lets you control a larger position with a smaller amount of money. For example, with 10x leverage, you're trading a position that's 10 times your initial amount, which increases both your potential profits and your potential losses. For beginners, I recommend using isolated margin with low leverage 2x to 5x. For this tutorial, we're going to trade with 3x leverage. This will keep your risk more controlled and makes it easier to manage your trades while you're learning. So we can confirm these settings. Next, let's go over the different order types that we can use on BYDFi futures. A market order is the simplest. It enters or exits a trade instantly at the best available price. Traders use this when they want to get in or out quickly. A limit order lets you choose the exact price you want to enter or exit at. The trade will only execute if the market reaches that price, so it gives you more control. Under limit order, you'll also see a reduced only option. Checking this box, make sure your order only reduces or closes your position and doesn't accidentally open a new one. Now, stop orders are a bit different. They only activate once a certain price is reached. A stop market order will trigger at your set price and then execute instantly as a market order. Traders often use this for stop losses or breakout entries. A stop limit order also uses a trigger price, but once triggered, it places a limit order instead, giving you more control over price, but with a chance the order might not fill. So in simpler terms, market and limit orders are used for entering and exiting trades normally, while stop orders are used for planned entries or exits once the price reaches a specific level. For limit and stop limit orders, you can also see a setting that says TIF. This stands for time in force. You have 3 different options for time in force. We have GTC, or good till canceled. This keeps your limit order active until it's filled or you cancel it. IOC, immediate or cancel, fills what it can instantly and cancels the rest of your limit order. Lastly, FOK, fill or kill, only executes if the entire limit order can be filled immediately. For most beginners, GTC is the best option since it keeps things simple and gives your order time to fill. For this video, we're going to use a market order because it's the simplest and fastest way to place a trade. Before placing your trade, you can choose how you want to size your position. For beginners, using cost USDT is usually the easiest option since you can clearly control how much money you're risking on the position. We are going to place a 3x market long on BTC with our full account balance. Now, before we make our trade, we see there is a box that says TP and SL. This stands for take profit and stop loss. These are key tools for managing your trades. A take profit automatically closes your position when the price reaches your target, helping you secure gains, while a stop loss does the opposite. It closes your position if the market moves against you, helping you limit your downside. Traders will use both of these to plan their exits ahead of time and manage both risk and reward. So we are going to set our take profit at 120,000 Bitcoin. That means that if Bitcoin would hit 120,000, we would be sold out of our position. We are seeing with our long, we would be up about 270 USDT or 142% with our 3x leverage. For our stop loss, we want to cut our losses if Bitcoin goes past 60,000. Again, we can see with our long, we would be down about 150 USDT and about 78% with our 3x leverage. This is the simple way to set a take profit and stop loss. There also is an advanced option. This can give you different ways to set your take profit and stop loss. We have by price, by ROI, or by P&L. By price is how we just set our take profit and stop loss. By ROI is the rate of return percentage with your 3x leverage. So let's say we're up 150% on our trade. This would put our estimated P&L at 244 USDT and Bitcoin's price at 122,044. And the last option, by P&L, would be setting your take profit or stop loss based on how much profit or loss you have. So let's say you have a profit margin in mind. You want to make about 400 USDT with this trade. We can see this would put you at 110% ROI and Bitcoin almost at 140,000. These are the 3 different ways that you can set your take profit and stop loss, but we are just going to keep it at what we did before, which was setting it by price at 120,000 for our take profit and 60,000 for our stop loss. We can now finally execute our trade. Click buy/long. Here we can see the stats for our trade. We can go over it one more time and then confirm it. We can see our trade on the chart. And also if we scroll down a bit, we can see our position under the Position tab. Here is where we can manage our position. We can see things like the liquidation price, unrealized P&L, which is our profit or loss. We can also manage our margin by increasing it or reducing it. And if we scroll to the right a bit, we can close our position with a market or a limit order. And we can also add on a trailing stop order, a take profit and stop loss, and a partial take profit and stop loss. Under open orders is where we can manage our open orders, like our take profit and stop loss. This is where we can edit our take profit and stop loss orders. We can change things like the price, amount, and the trigger price. We would just click on this icon here and be able to change things. This is also where we can cancel our order. We can cancel them individually, or we can click on cancel all. Now, I showed you how to add a take profit and stop loss before your order. Next, I'm going to show you how to add a take profit and stop loss after your order. So we can see that our trade is still live, and we're going to scroll to the far right, and under take profit and stop loss, we're going to click on this icon. And here is where we can add our take profit and stop loss again. We are just going to do the same thing as before, with 120,000 as our take profit and 60,000 as our stop loss, and confirm these orders. And again, clicking on this icon is where we can edit it or cancel both of our orders. Next, we're going to go through adding a partial take profit and stop loss. We can now see we can include how much of our position we want to include in the order. Creating partial positions with a take profit and a stop loss is a great way to slowly scale out of a position. So you can set, let's say, maybe 3 different take profit and stop losses, putting them at different price points, hence scaling out every time the price hits that price point. For this tutorial, we are going to just do 2. So we're going to include 50% of our position in our first take profit and stop loss and 50% in our second. So for our first take profit, I'll be happy to sell 50% of my position if Bitcoin hits 100,000, and we can confirm this order. Now for our stop loss, we can click add more, again doing half of our position. If I can just get it there, 50%. And I want to cut my losses if Bitcoin goes past 65,000. Again, selling half of my position. And we can confirm this order. We're going to click do not show again so this doesn't keep on popping up. So now we've set our first pair of take profit and stop loss orders. Next, we are going to do our second half of our position. So again, 50%. And this time I want to be fully out of my position once Bitcoin hits, let's say, 130,000. Again, we can confirm this order. And lastly, adding our final stop loss with 50% of our position. I want to fully cut my losses if Bitcoin goes past 50,000 and confirm this order. If we want to look at our orders, we can again just press this icon here, or we can head to the open orders section. Here we can edit our orders and also cancel them individually or all together. The last take profit and stop loss order I want to show you is called a trailing stop order. So let's head back to positions, scroll to the right, and we can see under trailing stop, we can click on this edit icon. A trailing stop loss is a type of stop loss that automatically moves with the price as it goes in your favor. This helps you lock in profits while still giving the trade room to grow. There are 2 main settings here. We have activation price and retracement magnitude. The activation price is the level where the trailing stop becomes active. So the trade won't start trailing until price reaches this point. The retracement magnitude is the percentage the price needs to move against you before the trade is closed. For example, if you would set a 5% retracement, the position will close if price drops 5% from its highest point after activation. The trailing stop order is a great tool for protecting profits without having to manually adjust your stop loss. So to give you an example of this, right now Bitcoin's trading at 81,324. I could set my trailing stop activation price at 100,000. So once Bitcoin hits 100,000, our trailing stop will be activated. And from then on, if there is a 5% price retracement, our position will be closed. Trailing stops can be a little complicated, so I hope I explained that well. We can confirm this order, and we can see under open orders, our trailing stop order. To cancel the order, under action, we can just click on this garbage bin. And finally, to close our position, we can do so in the order section. We are doing a market sell of our whole position, and we are going to sell. We can see our full position was closed as we have no positions down here, and we have about 199.59 USDT available. This means we lost about 90 cents on the trade, and that can come from some price movement and also trading fees. And that's it for this futures trading tutorial on BYDFi. Hopefully this gave you a clear step-by-step understanding of how everything works. If you want to receive a welcome bonus when signing up to BYDFi, you should create an account with the link below this video. The link will take you to this sign-up page where you can see all the bonuses that you are eligible for. If you like this video, feel free to give it a thumbs up and subscribe to the channel. We also have a website at cryptowinrate.com where we have lots of crypto content and tons of educational guides for you to sift through. Thanks for watching, and bye for now.